Okay, hello everybody, and welcome to Investing with IBD, sponsored by Interactive Brokers. Today is February 24th, 2021. I'm your host, Arusha Pierce, and we have Richard Moglen on the show. Richard just joined TraderLine, and he is the host of a great investing podcast named Market Chat that's on YouTube. Thanks for being here, Richard.
Oh, my pleasure. I'm a huge fan of your podcast, and I've learned so much from you on here and on IBD Live. So looking forward to this.
Appreciate it. So on today's podcast, we are going to talk about the current markets. We will talk about some of the lessons that Richard has learned over the first few years of investing, and then we will end with a few current ideas. All right, let's get into the current market. We are in a confirmed uptrend. We have 3 distribution days on the NASDAQ and 3 on the S&P 500. It's been a little volatile. Richard, what are your thoughts on this market?
Well, it's been something else, hasn't it? I mean, yesterday, it seemed like all the growth stock leaders were down 5, 8, 10%. And then by the end of the day, everything pretty much recovered. And today, we're recording this on Wednesday. Things, for the most part, rebounded and followed through. But still, I think it has to prove itself. But yeah, we'll kind of see how it goes and how the week closes.
I agree. There's one thing that sometimes it might be a little too easy that we came back so fast, and that's kind of in the back of my mind, right, that the markets aren't easy, and when good for you if your stocks only gapped down 5 to 8%. It felt like mine were all down at least 10%.
Right.
I could not believe it. I was like, what is going on here?
Right.
But yeah, they all came back, and some were even positive by the end of the day, which was crazy. And today it's kind of all over the place too. Let's see. I mean, with the way the how volatile the market is, it goes both ways. And a lot of times what I always tell myself is volatility is a form of distribution, and we want the markets to settle down. But that being said, we are above the 50-day moving average. Ideally, on the NASDAQ, we want to be above the 21-day moving average. But a number of stocks, they tested their key support areas at the 50-day and still hanging in there. Any other thoughts on this market?
Yeah, I completely agree with you about the volatility. For my type of preferred entry setups, I want to see very tight right sides of bases. And right now, things are kind of the picture of wide and loose. I mean, there's no standard bases out there to be found. So yeah, I'm being a little bit cautious and really waiting until the ideal setups for my type of style are setting up.
Yeah, and so let's get into your style and let's get into just what you've learned in investing. So you've been doing this now for a few years, right?
Yeah, I started my junior year at the University of Maryland and have been trying to learn as much as I can ever since.
Perfect. And first of all, well done on getting started early. And I was telling you this last week when we were talking. I think you're a great person to have on the show because you're 2+ years into this, and all those early lessons are still fresh in your head.
Absolutely.
Versus me, where I've been doing this for a long time now. It's still in my head, but it's not as fresh, I guess. But so walk us through how you got into investing as a junior at the University of Maryland.
Yeah, I think it's an interesting story, and I think I'm a little bit lucky to have been able to, because I actually didn't know anything before my junior year. I didn't know what an ETF was. I didn't know what an index was. I didn't know stop losses or any of that. And I actually took an honors seminar at the University of Maryland called Introduction to Technical Analysis and the Stock Market, taught by Dr. Eric Wish, who I know you know of. You know of him.
He's big fan of Dr. Wish.
Yep, you visited his class, which is awesome. And from that first class, I really was really hooked. And I'm sure you can get really invested into this stuff, pun intended. But anyway, yeah, from that first class, I think I took more notes than usually I take an entire week of my engineering classes. That's kind of what my major was, mechanical engineering. I've graduated since. But yeah, that class was awesome. We learned about the basics of CAN SLIM. We read all those great kind of books, Darvis, Minervini, of course, How to Make Money in Stocks. And I think it really kind of propelled my journey forward and kind of cut off 3+ years of the learning curve, just because I was taught by Dr. Wish, who's been already doing this for 50+ years. He nailed into our heads, you've got to cut losses, focus on the leaders, focus on the trends. So it was an awesome experience. And actually, after the class was over, I helped out and was a TA for the next few semesters. So I kind of took the class 4 semesters in a row. That's how much I loved it. And I know you actually came and visited one of the classes with Mark Minervini and gave a lecture. And actually also at the district IBD meetup in DC, I think I went and saw you guys 2 days in a row. So that was awesome. But yeah, that class really was life-changing. I say that very seriously. And yeah, I didn't know anything before that. And that really just propelled me on the right track. And since then, I've just kind of tried to educate myself even more from great books, people on Twitter. Let's see, of course, your podcast, any other kind of seminars that pop up, IBD Live, and just trying to stay in that mindset of a student. I know I'm in the beginning of my journey, but I think there's so much now you can soak up very quickly from YouTube videos, from podcasts like yours. And yeah, I'm just trying to learn more and more every single day, every single trade, because once you build that foundation with the books and learning about CanSlim, it's about applying it, tweaking your rules that you've written, and just gradually improving. It's going to be a constant process, I know that, but I think with the right foundation, you can speed up that learning curve quite a bit. I think we'll get into that later.
Yeah, and I mean, you're years ahead from where I was. Not only just since you started learning this in college, I was started learning after college, but just the technology has enabled everyone to get through that learning curve much further. But so you never took a finance course in Maryland, right? That this was your first kind of exposure. But did you have friends who were were finance majors or business majors?
I did. Go ahead.
Oh no, and I really wanted to more hear their reaction, because one thing about a number of finance courses in college, right there, it's complete opposite of what you learned at Dr. Wish's class.
Yeah, of course. Yeah, I had a bunch of friends who were business majors. I'm not quite sure what they do in their classes, but yeah, I never took a finance class in college. And Dr. Wish said a couple times that, yeah, what you're going to learn in the business school is more the kind of standard value investing models and all of that. And really that class, the class that we took in the honor seminar, is the CanSlim technical analysis. Price action is what matters. And yeah, 2 completely different sides of the coin. If you can learn a little bit about both, you can probably benefit. But obviously that class is more focused on CanSlim investing and growth style trading using charts.
Right. Yeah. And I've taken a lot of finance courses in just traditional valuation, stuff like that. And then there's a lot to learn there. And obviously there are many things that work in the market, which is what makes the market, and which is what's really cool about the market. But I think it's great that you found something that fit you pretty early on. Now, do you think that your engineering background maybe helped you appeal to looking at stock charts and technicals?
Yeah, 100%. I mean, as an engineer, we're used to looking at data, analyzing it, trying to find those trends. Also, just kind of the mindset of building up a system, following a set of rules, that very kind of regimented process where you've got to practice good discipline. That's built up in the engineering major curriculum. And also kind of being an engineer, you're taught to try to kind of figure things out for yourself and optimize your own process. So kind of all those components together. Yeah, I think engineers, there's a lot of them on Twitter. I know FinTwit. Yeah, I think that major translates really well into analyzing stock charts and using indicators, interpreting data. So yeah, I think that helped me out as well. Already being used to analyzing and drawing conclusions from different types of charts.
Yeah, I've run across a lot of customers of IBD and MarketSmith, and they are engineers or former engineers. I actually started out as an engineer student at Tufts University, and I lasted a semester, and then I had to get out of there. It wasn't for me. But that being said, all these kind of charts did appeal to me. But
Right.
so walk us through some of the lessons that you've learned in the first couple of years here,
Sure.
2 to 3 years, and maybe walk us through maybe some of the mistakes that you've learned the hard way too.
Right, right. So I've got a couple main things I want to talk about speeding up the learning curve and what kind of got me there quicker. And first things first, something that really was emphasized in Dr. Wish's class is having a set of written down rules that kind of describe your entire trading system and kind of will guide you into making good objective decisions as much as possible, as much as you can. So I think that basis helped out a lot. And I think components of a good trading rule set, you have to do market conditions. That's super important. The M and CAN SLIM, stock selection, position management. What is a good setup for you? Where are you going to set that stop loss? How are you going to move it up? And then also moving on, of course, to selling rules, which is something I 100% still have to work on. That's going to be a lifelong process. We talked a little about that earlier. And then also doing post analysis, all of that should be described in your trading rule set. So when it comes to the actual trading day, it's more about execution and following your rules than, oh, this stock is going up. Oh, my friend's talking about it on Twitter. Oh, I better hop on, and then it reverses, of course, because it's probably overextended. So I think that is a really important thing for people to learn and to speed up their learning curve. And then something that I learned from Jim Ropel in my interviews is really putting in the homework on the weekends before and after the market. So once again, it's more about that execution during the trading day. And he talks about his ride the wave plan. I know you've had him on a bunch of times. I watch every single episode where he's on there. He's super bullish. Yep. He's the man. But yeah, he talks about his ride the wave plan and knowing where your positions are, what cushion you have, the leading stocks in the market. All that is super important to basically find success consistently. And I think that's sped up the learning curve quite a bit, is developing a regimented system. And also something I picked up from Mike Webster. You guys have a great podcast on grading your stocks. And like recently, we've had a bunch of market turbulence. So you want to know your weakest positions, and those are going to be the ones you're going to cut first. So I think that's super important. Highly recommend checking that episode out. That really kind of really showed me the way when dealing with corrections. And then lastly, also from Jim Ropel, is to focus on the best of the best stocks for your system. A lot of the losses I felt like I was getting at the very beginning, I was entering at the wrong time, so not focusing on the best of best setups, but also there were some kind of junk stocks there that didn't quite fit the disruptive top line earnings, institutional sponsorship, all those different metrics that kind of add up to a higher probability trade. So once you cut out those trades, you're going to find your batting average increase, you're going to get stopped out less, and overall you'll find a little bit more success. So that's kind of three things I think can really speed up your learning curve. And in terms of three rules, if you want me to go ahead with that.
Yeah, go for it.
Yeah. So rules, as I said, are super important. I think in my view, you shouldn't be trading unless you have a written down rule set that obviously you can tweak as you get more experience and look back on past trades. But I think it's super important. And kind of at the very beginning, one of my biggest mistakes was entering extended into a position. And a bunch of people have kind of different definitions of extended. For me, I think I define it as far from the ideal buy point. And the ideal buy point is going to be different depending on your system, whether you're a market intervening style trader, an IBD guy, whether you're buying pullbacks like Charles Harris. So when it comes to me, I like to buy near the 21 EMA and when all of those moving averages are very coiled. So for me, I define not buying extended as buying within 2% of that optimal buy point, that support level, the moving average, the pivot if I'm using a VCP setup. And I think that's super important because a lot of your problems stem from buying extended, meaning if you buy it a little bit late, there's going to be a natural reaction due to the market, due to other conditions, And that might lead to a stop loss when, if you bought closer to that ideal buy point, you could easily weather that because you have that cushion to build off of. So it just makes things easier to buy it as close as you can to that support level. And you also know very quickly whether you're wrong, because if it reverses, as we'll talk about a little later, and when Peloton, we'll go over that trade, you know when it starts to go wrong very quickly, and you can keep your losses very, very short. And that's kind of my next rule, to keep your losses within 5%. I think that's very, very important, because it kind of manages the risk reward relationship in a way that you can be right even 30% of the time, 40% of the time, and still a big winner, which is going to happen every now and then, is going to pay for all of those smaller losses. So I think that's super important. And one thing that I'm still working on, this is a rule that I still have to kind of tweak and everything, is to not completely sell out of a big winning stock. And I made this mistake a lot last year. Probably a few other people did as well. Yep. But you get shaken out. It doesn't really do anything wrong. It's only pulling back on below average volume, and then it takes off and goes another 100, 200, 300%, whatever. So what I'm trying to do is hold a core position until it really breaks the 21 exponential moving average. And obviously that moving average is just a guideline. It's really watching the price action around that level, and also looking at where the stock has been picked up in the past. If it's the 50-day, I might use that, the 10-day even. So really trying to hold the stock until it does something wrong and breaks character. So those are kind of three things in a couple different ways that I've shortened my learning curve, and also three different rules that I think if you really cement them and put them into your trading rule set, it should help you out and really speed up that learning curve.
No, those are great rules. And I'll tell you, if you have the patience to hold on to some of those stocks and truly let them stop you out,
right,
you will find yourself in some monster winners, if that's your goal, right? And it really just comes down to the best fit and things like that. But yeah, it's having the patience to let them actually test the 21-day or the 50-day moving average. That's it, that's what makes a difference between a Jim Ropel and many others, right?
Exactly.
So let's take a quick break here. But when we return, we're going to talk more with Richard Moglen about some of the lessons that he has learned in his early years of trading, and we'll go over some examples too. We'll be back. Are you looking for ways to earn extra income? Interactive Brokers Stock Yield Enhancement Program lets you earn extra income on fully paid shares of stock in your brokerage account. Here's how it works. IBKR lends your shares to traders who pay interest to borrow them, and you receive 50% of the income earned. It's that simple. Open an Interactive Brokers account today and start earning extra income. Find out more at ibkr.com/SYEP. Richard Moglen's our guest on Investing with IBD, sponsored by Interactive Brokers. Okay, Richard, before we get into some of your stocks that you traded last year and the lessons that you've learned from them, let's one other question that I wanted to ask you in the previous segment was finding ideas. Right now, we all can find ideas through IBD, through MarketSmith, and a number of other sources. What about finding ideas just on the outside in everyday life? Have you stumbled on any interesting ideas that way, just through observation?
Right. That's a great question. I think 100%. I don't think I've bought anything just because I've noticed it in the outside world. But yeah, there's those products that pop up every now and then on the radio, on television. You hear about it on Twitter with your friends. And I think the most obvious example is what we're using right now. We've got Zoom recording this podcast. On my podcast, it makes it super easy. You can record straight from it. And yeah, keeping an eye out for products around you, I think, is a great way to find ideas. I was on a road trip recently. I heard a bunch of advertisements for Stitch Fix, SFix, which has been a very big winner recently.
Oh,
yeah. So
do you know anyone who's using Stitch Fix? Yeah, have
I
you run
don't.
across any friends or anything?
I don't, not yet, but I'm sure I will. I think it's a big growing brand and platform. So, but also Peloton. I think everybody on Twitter is talking about. Oh, I just did a workout to this song and all of that. So,
That's funny.
yeah, keeping an eye out, I think, is super important.
Or what about like a
Because
Spotify? Like, are you using Spotify? Is all your are all your friends using it?
100%. Yeah.
Okay.
Podcasts, music. Yeah. Spotify is a great example. I mean, it had a really nice run recently in 2020. So, yeah, Spotify is a great example of looking around you and trying to find ideas that way.
Perfect. Okay, so let's get into some of your previous trades from last year. Obviously, now you've been doing this for a few years, and for the most part, it has been pretty good. The
The
markets
market's
and
been helpful on that
yeah,
front.
and last year was insane. That was the
Right.
best year I've seen in 20 plus years. Now, 99, I was there for that too, but I wasn't really studying this system. So I didn't, it was just kind of just in the periphery, and I just had some money in it. But yeah, last year was just ridiculous. But
Right.
that being said, it was great that you're already knowledgeable about this stuff and you were able to actually get some experience from that, because those are in the cards too. They may only come every couple of decades, but those type of rallies are there. Those type of markets where everything lines up is there. So you don't want to just assume that'll never happen again. So you're going to share your screen, right?
Yep.
And
Yeah, so this is going to be one of my trades from this past year. I traded Zillow. And first things first, in MarketSmith, super convenient to go ahead and check out the recent earnings and sales data. Arusha, I know you like to start on a weekly, but I usually look at a daily first and then get a sense. Yeah, get a sense of the longer term trajectory of the stock. You can see overall, it broke out into longer term all-time highs right here, and really hasn't looked back. So within a longer term uptrend, I'm trying to find a spot to get in off a reversal, off a base, and I got in right here. And
perfect. Yeah, I actually bought there too.
yeah, it was a pretty good entry. But anyway, going back to the earnings and sales, I mean, 400% earnings, that's always going to catch my eye. It had really great estimates for the next year. I would love to see like increasing amount, but maybe that's
working on it. Yeah.
Yeah, that would be awesome. But anyway, once I've noticed that it's a promising stock, good fundamentals. I take a look at the chart and look for a tight right side of a base. So I was noticing right around here where this isn't a kind of classic cup and handle or anything, but it is a nice consolidation due to the market correction and everything. So you can see right here, it goes straight off the bottom. We have this really fast move up here. And I wouldn't be buying here because unless I get a good entry right at the 50 SMA, it's already extended by the time I'm probably looking at it on my screens or anything.
Right.
But that straight off the bottom here on large volume makes me keep an eye on it. And it really tightens up, does a little bit of a Markman or VCP here. And right here, this point where it gets really tight on the right-hand side, that's where I'm looking for an entry. And the buy for me was on this day right here through the prior high. And then I added to it through this pivot. So this is kind of a VCP setup. You've got a longer term contraction, move up, contraction again, and then it gets really tight. You can manage your risk very well, just a few percent. The stop was most likely at the low of the day, and it works right away. And I know, Arusha, you say this all the time, the best trades work right off the bat. They move up on nice volume, as we can see right here. Now, this is another example of me selling a winner too early. So this is really why I need to focus on that, because I think my buy here was pretty good, but I did end up getting shaken out for half my position on this day as it closed below the 21 EMA, and then the rest here. And I think I had my stop at this low. So I'm kind of doing all these crazy drawings, but basically, yeah.
And Richard, one second. So for those of you who are listening, and if you're in your car, if you're working out and listening to this, when you get back home, go to investors.com/podcast. You can see the video version where Richard is marking it up on the charts where he's buying and selling. It's definitely some good lessons here to learn.
Yeah, for sure. And I think I also should have kept this on my radar. And this is another thing that I'm working on is once I sell the stock, don't just forget about it, because I bought it for a reason and it had some potential here on the volume. And all this sideways movement is on below average volume. MarketSmith does a really good job of analyzing and showing that lower than average volume. This is the 50-day here. And it does a nice setup just a few days later after I sold it, breaking above these highs. So I could have easily managed my risk against the 50 SMA, and it really just takes off. Had a nice earnings report as well, and now it's pulled back during the market correction. But yeah, I think my entry was good, but my selling rules and position management could have been better a little bit on this trade. And even if I sold here, maybe only sell a half and try to get back in off the 50 would have been maybe a better option there.
No, and I agree with you, and it's I don't think I managed this thing very well either. But the one thing that I learned, and it took me many years to learn this, is getting shaken out is part of the game.
Right.
And what is the difference between someone who's just learning this and someone is becoming more of a professional at this?
Right.
Is the professional will get back in when those expectations are broken. Because why'd you get stopped? When you sold it around that 125 area, 126 area, why'd you sell there? Right. I mean, you got stopped out and stuff, but what's kind of the larger concept why you sold there?
Because it was breaking the expectations. I mean, from this move off the 21 EMA,
what were the expectations when you sold there? The expectations were that it was going to go lower, right?
Yeah, exactly.
So you're trying to protect yourself from losing even more money, right?
Exactly.
But when it gets back above it and starts doing something differently, now those expectations have been broken. And so that's where, if it's really one of the top stocks on your radar and you don't want to lose it, that's where you just have to find a way to just get back into it, because they're sometimes where it's just not going to be perfect, especially if you get stopped out at an imperfect type of area.
No, absolutely. And so I think Zillow, it was a pretty good trade overall, but yeah, definitely some lessons learned. So
yeah, that's good.
Moving on to the next stock, let me open this up here. We've got TELADOC. So this one I was watching for a while. It was very choppy here. I had traded it along with Livongo. I had a full position on the merger day in both Livongo and TELADOC. So that was an interesting day.
Yeah.
Some quick risk management there to cut quickly. But yeah, anyway, it chopped for a long time, was pretty wide and loose here. But then I noticed, especially on a weekly chart, there's a little bit of changing character. And if you look here at the tails of all these bars, a lot of them are finishing well off the lows. And that's just a little bit different than here. And the right side of the space really started to form up. So that's kind of what got it initially on my radar. Plus, it had such a strong prior uptrend. I'm always looking for a stock that in the past, to the left of the chart, did very, very well. So it had those things going for it. And then I was looking for some tight area. And I initially spotted it around this tight area. It moved up. I thought I missed it. Didn't execute. I think I was fully invested at that point. But then it pulls back again. And once again, it gets really tight along this 200 level. And I started buying it on this upside reversal day against the 200 day. So I was willing to stay in it as long as it stayed around that 200 level.
How big a position, or did you go to your full position at that point, or do you just slowly scale into it?
Right. This is a half position to start off the hammer. And then I added a little bit on the next day as it moved above this high, and then added, you can see there's a little bit of a pivot there using this high. And once again, a little bit of volume comes in, not necessarily high above average volume, but higher than a lot of the down days of the previous bars. And then it starts working right away. I mean, look at this bar right here, finishing right at the high on large volume. That looks great. I added a little bit more on this breakout, but I really like establishing the majority of my costs and my position before the kind of obvious breakout. It just, as I said before, buying right and getting my costs low allows me to sit through this chop a little bit and not get too whipped around, because I think my cost at this point was around 206, so pretty low.
Why was TELADOC obviously had to be pretty high on your list at that point for you to really identify it there? Now there are plenty of other stocks that were well into new highs and trending well. Why was this one that you chose over those that were trending quite well?
I don't remember the specific reason, but
what was it? Just maybe just kind of the larger story or something that you liked, or
I mean, I had some experience this year, obviously, with using telemedicine, like video chats with my doctors, COVID tests, all of that, and yeah, I kind of believe in the story here, and it is in a low industry group, which is something to think about. And obviously, I want to stay top 40, top 20, ideally, but. I think it's still a really interesting story. I think they reported just today, and it wasn't too great, and it fell here. But I got it out over here. But moving back to over here, I did add a little bit on this breakout, but once again, my cost is still pretty low, and it worked right away. I think I maybe sold a little bit on this day, or actually this move up, I sold a little bit, just trimming a little bit, and then maybe got in a little bit here, and then it chopped around here, and I think I sold a little bit, actually about a quarter of my position on the big downside reversal. This broke expectations because from this bar it moved up all the way here above 300, and then that's a pretty bad close here, and I cut the rest of it on this big downside reversal bar. Not downside reversal, but really this broke this low, breaking expectations once again.
Oh, that's good. That's a good trade there. That's a very good trade.
Yeah, but yeah, you're right about the group, and also the RS rating wasn't superb. But yeah,
well, I mean, the only reason why is because I'm asking that is because I bought it a little bit later than you out of that other consolidation. But that was the kind of the, I like the larger story of TELADOC, and obviously telemedicine is here to stay and it's only going to grow. But there were so many other ideas that it was just a struggle to try to convince myself to get in, which is why I didn't get into where you got it in that first big pop. Well, you got it even before that because that you're way ahead of the game. But so I got in after that other consolidation there. But yeah, no, this is a good trade, and I think it's a good example of also locking in your gains when you have the opportunity to do it.
Yep. And there's some warning signs. This downside reversal bar, and then this one broke all of these lows in just one day on larger than the other day's volume. I mean, here it's kind of wedging up on below average volume, and then starts falling on a little bit higher volume. So once again, some warning signs piling up, and then obviously we have the gap down. And so far it's holding this base pivot, but I think after hours, I think it's actually down below that. So
well, I think they reported. They reported today, right after the close. Let's see where
I think so. Yeah. And we'll see if it falls all the way below in the space, or maybe find support at 253, and maybe if it tightens up, I'll give it another shot.
Yeah, and that's the way to do it. It looks like they're down 7%.
Yeah, this is Peloton, and once again, this is kind of a buy within the base. And I actually got burned on this gap down. I tried this reversal and got burned here, but it held. It kind of broke expectations once because it gapped down, but then also
it gapped down.
It held it
too.
Yeah.
So you were willing to buy. You're like, let me take a little bit before earnings, or
I had some cost here, and I added a little bit here. But then it started holding that 50-day moving average and tighten up against that 50-day. And I used this high as a pivot. Good volume coming in, not above average, but higher than these previous bars. And it worked right away, just like a lot of I find my best trades do. And then it got very choppy in here. And I think I sold a little bit, added a little bit back on the reversal, but then it comes down to this point. And you think it's going to go here. It reports earnings, it gaps down, but it holds it. So I was still holding half my position at this point, and I bought it back on this really nice move through this tight area. I think I added through this high and then through this high as well. It's a little bit hard to see here, but anyway, the next day it breaks expectations. I mean, from this bar, you're expecting it to challenge all-time highs, and that doesn't happen at all. So I sold half my position, all my ads here, and then cut the rest as it broke this low on this next day. So yeah, I'm a little disappointed. Hopefully it firms up, forms another base here. It still has really pretty strong earnings for 2022, although estimate revisions are down. But I mean, look at these earnings and sales numbers, fund ownership, quality fund ownership. This stock has a great story, great fundamentals. The price action just has to line up again with a nice tight area where I can manage risk.
Yeah, no, and this is another really good trade. You know, not a good trade doesn't necessarily have to be profitable, right? A good trade, really the way we define a good trade is, are you following your rules or not?
Right.
And you're following your rules, and especially when it started to break the 50-day on decent volume. It wasn't a huge volume, but started to break it. And also even the day before, you picked up on a little bit of a character change. But once it broke the 50-day, that was a little bit more of a character change. I mean, even if someone held at that point, you couldn't really, and they were up on it, you couldn't necessarily really fault them for it. Then, of course, a few days later, once it really started taking out the lows of that, then now it's more clear that, okay, Peloton just needs some rest here.
Yeah, it looks like the left side of the base, where a lot of the big growth stock leaders look like they're forming the left side of potential base. So we might need a little bit more time in the market here. And yeah, I was watching it to potentially buy it on these days after I had sold my position, because it was holding that prior pivot level, but it just didn't want to follow through on. And on this day, this is a really pretty bad bar, finishing right at the lows.
Yeah, and Peloton's been running for a while, and
Yeah,
so
absolutely.
it when they become obvious, they're not going to work as well, and
Right.
that was probably close to a third stage base or stuff like that. I would have to look on the weekly, but yeah,
I think it's actually a first stage base. This
well, maybe it
stage one consolidation. I think it's just because it was so choppy and it almost had an
yeah,
ascending base
that one
through the
really
correction.
a stage one. Like if you're looking on I was looking at my charts over here, but yeah, so there's that's your real
First stage
kind of
one,
first
yeah.
stage base, and then honestly, like halfway through, you could say that there's some kind of flattish kind of base right there. It just probably barely missed the pattern recognition. So that's more like the third stage base, and the problem with that base is. You talked about wide and loose before, like honestly, because I tried it off with that 10-week too, and I got that pop, and I was kind of surprised that it worked, but I was like, okay, I'll take it, and then I did sell out. I tried again off the 10-week line, and then I had to sell at a loss there. But that kind of wide and loose that you referred to before, that was a little troubling to me, and that is also more of a characteristic of a later stage base. Now. If it takes some time off, even undercuts that previous base, now you're going to really shake out a lot of the weak holders. I mean, you're already shaking out weak holders left and right, but you're really going to have a transfer from those remaining weak holders to the strong holders. And if Peloton truly is going to work, then it should start to act better. And maybe, who knows, maybe another 3 months, 6 months, it could set up again and surprise people. So that's Peloton. And just very quickly, go over some of that. So you've been doing your podcast now for how long?
I started last year, I think in February, maybe. So maybe that was the first episode I did with Ben Bennett, Pattern Profits on Twitter. That was awesome to have him on. But yeah, it's been going for a while, but really has picked up earlier this year. I've had some really awesome guests. The U.S. investing champion of 2020, Oliver Kell, came on.
That was a good
He's
one.
Awesome. Jim Ropel very recently. He's very easy to interview, as I'm sure you know, because he's got that energy. But yeah, it's been fun. And like I said, every single interview, I learned something new that I can apply to my trading. I pick up something from every guest that has helped me. And I think it's, once again, really helped me speed up my learning curve.
And just a couple of lessons that you've learned over the year of doing the podcast. What are some of the kind of the keys to doing a podcast or really doing anything?
Right. So in terms of doing the podcast, I think number one with any video is kind of value. So you have to find good guests to interview, and it's tough starting out. If you don't really have a name yet, it's hard to find those people, but I found some great people willing to spend time with me. Ben was awesome. Patrick Walker on Twitter. He's a great slim guy. And you gradually want to keep asking better and better traders who are a little bit better known, and keep up the momentum, keep interviewing people. And that's another thing. You want to be consistent, because this year I made a kind of goal for myself to interview one trader every single week and post it. And that way the audience know to expect it. And that really benefits, because they know there's going to be a podcast every week at some point, and they'll be able to watch it on the weekends, learn something new. That's part of their kind of daily routine. And the last thing I think, the last thing I think is to stay in control of the questions and make sure that you're guiding your guest. I know you're a great interviewer. You know how to, when people get off track, you can kind of lead them back in the direction. Jim Ropel needs a little bit of that. He's admitted as much, but he's a great sport about it. But yeah, having great questions and guiding your guests so you get the most out of them, I think that's really important.
Perfect. So being consistent is the true secret to learning
For anything.
Yeah.
Yep.
You want to be consistent at, maybe if you're doing a podcast, and you definitely want to be consistent at learning something as complicated as the stock market. So coming up next, we'll talk about a few ideas. Stay tuned.
Interactive Brokers charges 1.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
We are back with Richard Moglen on Investing with IBD, sponsored by Interactive Brokers. Okay, Richard, let's get into a few ideas here. And the first one that we're going to start off with is ZoomInfo, ticker symbol ZI. And let me pull up the MarketSmith charts here. So ZoomInfo Techs. And I'll go to, you know what? Since you like starting off with the dailies, we'll start with the dailies.
No, let's do the weeklies.
Okay, we'll go to weeklies. Okay,
go for it.
Okay, we'll start off with the weeklies here. And what do you like about these guys? And let me actually change the scaling.
Yeah, right. So I think to start things off, this is something I picked up from Kathy Donnelly from the Life Cycle Trade. I'm looking for a stock within its kind of first primary base, the IPO due diligence phase, and it's starting to move up that right-hand side towards that kind of high that set in its kind of IPO advanced phase. So this is kind of the first kind of viable point here. We saw a lot of stocks work last year. I mean, all the big winners, Peloton, we talked about, CrowdStrike, they started off from this type of setup. So that kind of drew my eye immediately. And you've got a first kind of base within base. I think there's a cup identified in MarketSmith. So that's kind of what drew my eye, as well as the really strong growth numbers over there on the left-hand side.
Yeah, no, this is one that's on my radar. I actually was in it a little bit earlier when it was forming this cup.
It was so choppy right there.
It was choppy, yeah. But it has an interesting story too. What they're doing, what they've essentially done is they've found a way, or they've really kind of gone through the web and through other sources and figured out a way to compile org charts for companies. So if you're a salesperson trying to, if you're trying to sell to a company like Apple or some other large company, you know, trying to get to the right person in marketing or sales and pitch whatever you have, it's very, very difficult. Trying to call them or send emails, you're not going to get anywhere. But what ZoomInfo Techs is doing is they're collecting all that information. So, and they're essentially identifying, these are the kind of the key people, the key decision makers, just using the org charts. And that there is something there with that. I thought that was a really, really interesting story when I read about it, and doesn't surprise me that it is slowly kind of sneaking up there. You have some good institutional sponsorship there. 3 of our IBD Mutual Fund Index members are in there too. And so I'm with you, Richard. I think this is one to keep on the radar, and we'll see. I mean, it is a little extended right now from this cup. But you also identified, there's a larger cup here, and you mentioned Kathy Donnelly's and Eve Bovek, and I think Eve's coming in a few weeks on the podcast, and Kathy's coming in a couple months again about the institutional due diligence phase. And I've always liked that, where it takes some time off, a year off or so, maybe longer, and then now if it gets into new highs, it's kind of past that institutional due diligence, as they call it. All these really smart analysts have gone through the company, they've kicked the tires, looked at the numbers, and there's like, okay, this is a legit company, and this is a good investment, and they're slowly moving into it. As opposed to when a stock comes out IPO, it might be just a little too early for them to really do kind of that nitty-gritty type of analysis that they like to do.
Yeah, and maybe it pulls a Zoom, but probably not to the same extent.
I wouldn't expect it, but you never know. You know, I didn't think Zoom was going to pull a Zoom, and I was around at this stage when Zoom was doing that. I was in Zoom at that point, and I did not. There was no way, I thought, which is why I got shaken out of it during the pandemic. But that's ZoomInfo Techs, ticker symbol ZI, and let's go to the next one. This is Pinterest, PINS. I have shares of this one, and Richard, What do you like about these guys?
Right. So I've traded this a few times. It was one of the really strong earnings gap ups of last year. Really chopped around there for a bit, but then really exploded up. And I think what drew my eye recently is it did pull back to the 10-week there. And there was some buy points in there. I wasn't able to build up enough cushion before earnings to really hold through that. But recently, this past week, I mean, a lot of charts look like this power hammer off the 10-week. That catches my eye because of how strong the overall kind of social media group has been. Snapchat looks pretty similar, which I think we'll talk about later. Twitter also looks pretty strong. So it's an overall group that's holding up well. And you can see internet content is 25 out of 197. So it's one of the top stocks in the top groups. And you've got really strong estimates for 2021 and 2022 over there in terms of earnings. So, and look, the revisions are up too. So analysts are boosting their numbers. There's price action supporting it. That hammer off the huge reversal after the big drop shows that there's kind of institutional demand picking up those weak holder shares. And you've got great fund ownership increasing pretty much every single quarter and a whole bunch of those high quality funds. I love seeing at least one or two and ideally, 5 or 6. That really just shows you that it's a company that's got something special going for it, and the price action is matching those fundamentals.
Yeah, I agree with you. And it was you mentioned Mike Webster. Before when Mike and I did a podcast, I think it was around here in March of last year, maybe a little bit earlier. I think we did it in the studio. We brought up Pinterest at that point, and so we both did research on it. And we looked at it, and we actually even played with the site, and it was like, wow, this is a really, really interesting site. I had never tried Pinterest before, but that's how it really kind of got on my radar. And one thing that stuck out to me with Pinterest was the conversion rate, where when people are in the site, they're looking at the site and they're looking at some specific things, some crafting or whatever they're liking. If there's an ad there, the buyer intent, the actual them clicking on it and actually going through and purchasing something is much, much higher than a number of the other social media sites out there. And it makes sense because they've become so niche and they're
integrated too.
Yeah, exactly. And they're immersed in it. And they've done you speak about integration. They've done, they did a partnership with Shopify recently. And so that's going to make more kind of ads kind of be more seamless in there. So yeah, these guys are onto something that has gone on a big run. It hasn't really took, as you mentioned, it did take a little bit of a break here, but and then it put what do you call it? The power hammer?
Something like that.
I like that. That might be a Richard Moglen new pattern, the power hammer.
I mean, how else do you describe like a 10-15% range off the bottom? A power hammer.
Terrifying,
it's gotta be
terrifying, because that's what I was yesterday when it gapped down 10+% and then came back by the end of the day. But so terrified in the morning and then relieved by the end of the day. But yes, that is, it still does worry me that it's with all that volatility, could it come back down by the end of the week? So I'm concerned about that. But it kind of did another power hammer kind of thing right over here. So maybe it is just in the kind of the character. And here's the realities. Some of these stocks, especially when they're newer, they will do some crazy things like this, where this real volatile action the first couple of days of the week, but by the end of the week, they'll bring it all the way back. Right. And you've gotten shaken out on a Monday or Tuesday, and now they brought it all the way back. Yep. And you're like, oh my God, I'm not in the position, and then it takes off, So right. That's where those rules come into place. And our earlier conversation where if you can follow those rules, right, and truly allow them to stop you out or really break those key support areas, you're going to find yourself in some big time winners in the future when you have nice trending markets.
Exactly. And you mentioned a lot of these are a little bit extended. They've gone on nice runs. I would love to have a 1-2 month correction to set everything back up, build some bases, and then we can have a nice long uptrend to end the year. That would be the ideal situation. Who knows if we get it, but yeah, a lot of these need time to build another base, find support, and tighten up on the right hand side. That would be ideal.
I always say that I would love to get some kind of correction now. And then when it comes, I'm like, I don't want that correction. I don't.
Well, it's got to
You
drop
always
so you can sell your shares to me. That's how it's going to work.
I know. I sell my shares always to the smart money. So, and most of my shares are probably going to you too. But let's go to the next stock right here.
Sure.
This is DraftKings,
Mhm.
ticker symbol DKNG. And they might have a power hammer coming into play right here too in the latest in this last week. But the big thing for them is they're reporting earnings in a couple days. So what do you like about DraftKings?
Yeah, so this is kind of in its own category with there's Penn Gaming as well. Skills is also acting well. So there's a couple of them within this space that are performing well as a group. And I think that's always important to find a group that's doing well and find the top stocks within that group. And you can see leisure gaming equipment is 31 out of 187. So top 40, ideally would be top 10, but that's pretty good. This doesn't have earnings. It's not profitable yet, which is one drawback. But what really caught my eye here is the fund ownership and the quality fund ownership. So for a stock that isn't profitable, it already has a lot of top funds in it, and they have a much longer term picture than you or I, and they think this stock has a pretty bright future. So that's kind of what got me interested. And then looking at the chart, it's had a very strong prior run. Obviously, it could use a nice longer term rest. Just to pull back to the 10-week doesn't quite cut it. But overall, this last cup, I think, also is pretty deep, about 45%, 50%. So that's a little bit too much here. But overall, it's acting well, especially during this craziness of this past week. And as I said, it's acting well with a group of other stocks within that same industry group. So that's kind of what I like about it.
Yeah, and now it's only 6.9% off the high. You bring up a good point with this deep cup right here. Sometimes it'll form a little bit more shallower type of pattern. When they come out of these deep type of bases and they try to go, it's just too much. And so then it needs to settle down, go sideways for a little bit, form a nicer, cleaner base, and then it can move out. So we'll see if that works. One thing that kind of concerns me is the relative strength line is not closer to newer highs.
Yeah.
So, but so we'll see. It's been a little bit of a laggard because so many things have just been running. But now, have you used DraftKings in the past, like for fantasy football and things like that, or?
I'm not too much into fantasy. I've got a bunch of friends who are into it, and that's another example of a stock you hear about on the radio and on Twitter. I get so many ads for DraftKings, Super Bowl. I think I just heard on the radio you can bet $1 and they'll give you $100. Some crazy offer like that. I'm not endorsing that in any way, but I thought that was interesting. But yeah, you hear about this company and stock all over, and it seems like there's a lot of growth potential there.
Yeah, no, and obviously the big thing is it's no longer the fantasy part. They're going into online gambling and for real sports and stuff like that. And that's where the whole country is going. Everyone's much more open to it. So let's go to one more stock here, and this is Corsair, and this is a company that I was in, and I actually still have some shares, but I was in pretty early on just because I remember seeing all the really expensive equipment at Best Buy, and I was like, who would be crazy enough to buy this? But you know what? There's a market for it, and I might not necessarily buy it, but if others are buying it, I want to buy the stock. What do you like about Corsair?
Well, first off, Arusha, you're not buying a $2,000 gaming PC to play Fortnite at 400 FPS.
If I'm going to buy a PC like that, I'm going to buy it for just trading. Even though and I actually do have a gaming PC, and I don't necessarily game on it. But the reason why I bought it was because I could feel cool. I wanted to feel like I was a gamer. But yeah, but go ahead.
I'm sure it's got this LEDs and all that built into it.
I don't know if it does. It might have it. I just haven't turned it.
Anyway, going back to the stock, I mean, first things first, it doesn't have the greatest estimates for annual EPS, which I don't like. It's actually supposed to be down in 2021, but revisions are up, and I think, in my view, this is a increasing market. Computer hardware, gaming, I think, is huge, especially with the pandemic. A lot of people, they were playing Among Us. All of my friends were playing Among Us, which obviously doesn't need a huge PC like this provides. But a lot of people are getting more into esports, gaming, and this is the kind of go-to place to buy a really strong computer on the internet. and it's showing in the earnings and sales recently. I mean, look at these numbers. 800% growth, and this most recent quarter, it is decreasing. But I mean, it's still triple digit. It's almost 200% earnings growth. Sales growth is supporting that earnings growth, and it's not small numbers. It's $500 million. It looks like the most recent quarter. So I love that trend. Revenue growth is increasing, and hopefully that shows up in the earnings estimates. And maybe the next time they report, we get some boosting guidance or something like that. But going to the chart, look, it's very choppy on the weekly chart. I mean, and it's having a lot of trouble with 45. I've noticed I bought it and along the bottom of the base here, but it couldn't break out of 45 this most recent time. And now it's pulled back and had another power hammer this week. I love that, Arusha. I'm going to use that in my videos.
No, that's yours. That's all you.
Yeah. So this once again needs time, and it's kind of in its IPO advanced phase still a little bit. It's kind of forming its first primary base here. But yeah, I think it needs time, especially with the way the market is going. I won't be jumping in anytime soon. It has to really tighten up and form a good low risk entry point before I would be interested, but it's definitely top of my list.
Yeah, this one over the last couple of months has whipped me around a lot, and I have taken too many unnecessary losses with it. So I have some shares of it, but I'm hoping it settles down and quiets down, because it is impossible right now. But with the power hammer, maybe the power hammer will solve everything and help Corsair get better. The things that kind of stuck out to me on the story side, Corsair's been around for a while. They've been around for 20, 30 years. They start out making like hardcore components, and then moved into the other things, the other like kind of the rigs and all that stuff. But the one thing, and I know you've noticed this, and maybe a number of your friends are doing this too. A lot of people like to broadcast themselves playing games, and that has obviously become a huge thing. And I've watched some of those videos, and it is kind of interesting to watch people play. They definitely play the games much better than I do. But Corsair sells a number of like the camera equipment,
Elgato brand,
Oh, there you go. So yeah. So that's what kind of. So you mentioned the esports and then the broadcasting. They're essentially selling you a whole package, where here's the computer, here's the lighting, here's all the other different kind of camera kind of things you need. And so you can just kind of get everything from Corsair and start broadcasting pretty quickly on YouTube or Twitch or wherever else. So they are well positioned for that kind of esports trend. And in many ways, they could be one of those picks and shovels plays. And I kind of like those picks and shovels type of plays for larger trends. So there you go. There are 4 ideas right there, and 4 ideas worth considering adding to your watch list. Thanks, Richard, for joining us today.
Oh, my pleasure, Arusha. I love the podcast. I watch as many episodes as I can. And it's really an honor to be invited, and hopefully people get something good out of this interview.
No, I think they will. I mean, it is honestly, well, I do like your podcast a lot too, and you have a lot of great people on it, and you guys go into a lot of really good trading details too. So I highly encourage everyone to go and check out Richard's podcast on YouTube. And honestly, it is very, very impressive how much you've learned in the last few years.
Thank you.
So well done. Keep going, and definitely come and visit us again.
Oh, will do.
Next week, we will have Joe Fahmy on the show. Joe's the managing director of Zor Capital, and he is a star on Twitter and FinTwit. That's it for this week on Investing with IBD. I'm Arusha Paris, and thanks for listening. And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.